Most business plans don't fail because they're poorly written. They fail because they were never meant to be used. They're written to be approved, not to guide decisions. And once they serve that purpose, they're forgotten until reality exposes the gap between the plan and the business. In this video, I want to explain why most business plans fail and what a responsible business plan should actually do. Section 1, the real problem with most business plans. Most business plans are created to satisfy an external requirement, an investor, a bank, an institution. Once approved, they're archived and slowly disconnected from reality. This is not a failure of effort, it's a failure of purpose. A business plan is not meant to predict the future, it's meant to help a business survive it. When a plan is built around optimistic projections and generic templates, it creates a false sense of certainty. And false certainty is one of the most expensive risks a business can take. Section 2, a business plan is a system, not a document. A responsible business plan is not a static document. It's a system of thinking. It forces difficult questions early, when mistakes are still cheap. What problem are we actually solving? Why should this solution exist? What assumptions could destroy the business if they are wrong? And how does this business remain viable under stress? A good business plan connects strategy, operations, financial logic, and risk management. Without this connection, growth becomes fragile and capital becomes exposed. Section 3, why investors care more about structure than ideas. Ideas are abundant. Structure is rare. Investors are not only evaluating your product or service, they are evaluating your ability to allocate resources responsibly over time. A clear and well-structured business plan signals discipline, realism, and long-term thinking, especially today when capital is more selective and risk awareness is higher. A responsible business plan shows that you understand your constraints, that you respect capital, and that you think beyond short-term gains. Section 4, sustainability as risk management. Sustainability is often treated as a marketing angle. In reality, it's a form of risk management. Businesses that ignore social, environmental, or operational impact accumulate hidden liabilities. These liabilities don't appear immediately on financial statements. They surface later, through regulation, reputation damage, rising costs, or instability. A responsible business plan integrates sustainability, not as an add-on, but as a design principle. This doesn't slow growth. It makes growth durable. Section 5, when writing your own business plan becomes a mistake. Writing your own business plan can be useful, up to a point. It becomes a mistake when you are raising capital, entering a new market, scaling operations, or restructuring an existing business. At these stages, blind spots are expensive. An external, structured perspective is not about outsourcing thinking, it's about strengthening it. Section 6, what responsible business plan writing looks like. At Responsible Wealth Tribe, business plan writing is not about templates or inflated projections. It's about clarity before growth, structure before scale, preservation before expansion. Each business plan is treated as a decision-making framework, not a sales document. The objective is simple: to help businesses grow in a way that is financially viable, ethically grounded, and resilient over time. Finally, a business plan cannot guarantee success, but a poorly designed one almost guarantees unnecessary failure. Responsible planning doesn't eliminate uncertainty. It prepares you to navigate it. If you're building something meant to last, the way you plan matters more than how fast you move. If you or someone you know are looking for professional business plan support that prioritizes long-term value, disciplined growth, and responsible capital allocation, you can explore how Responsible Wealth Tribe supports founders and businesses through structured strategic planning. Check the description below the video for more details, and don't forget to like, comment, share, and subscribe.